You walk into your bank on a Wednesday afternoon. There's a problem with a wire transfer. $1,500 is stuck somewhere between accounts, and you need it sorted out today. You wait in line, 12 minutes. When you finally reach the teller, they tell you they can't help. You need to call the customer service number. You ask for a manager, they're busy. Come back tomorrow. You leave frustrated, powerless. Now, picture this. Same bank, same problem, different person. They walk in, no line. The branch manager greets them by name, walks them to a private office, makes a phone call, and the issue is resolved in 4 minutes. What's the difference? It's not luck. It's not a connection. It's a number in a database that you can't see, but the bank absolutely can. And once you cross certain thresholds in that database, the entire system starts working differently for you. Most people never even know these thresholds exist. See, most people think banks treat everyone the same. You open a checking account, you get a debit card, maybe some overdraft protection if you're lucky. Rich or poor, the system's the system. But that's not how it actually works. Banks have a tier structure. It's invisible, it's not advertised, but it's absolutely real. And the moment you hit certain balance thresholds across your accounts, doors start opening that most people never even see. I'm Zik, and what I'm about to show you isn't about becoming a millionaire. It's about understanding the 5 specific numbers that unlock a completely different banking experience. And more importantly, what happens to you psychologically when you cross them. Because the real shift isn't what the bank does for you, it's who you become in the process of getting there. Let's start with the first threshold. $25,000 in combined deposits. This is the number where most banks stop seeing you as a cost and start seeing you as a customer worth keeping. Here's what changes. Overdraft fees? They start getting waived automatically, not because you asked, because the system flags your account as valuable. That wire transfer fee? Reversed. That monthly maintenance charge? Gone. It's not a huge shift, but it's real. And psychologically, something happens when you hit this level. You stop feeling like the bank is working against you. Those little fees that used to chip away at your balance every month, the ones that made you feel like you were being nickeled and dimed, they disappeared. It's like running with a 20-pound weight vest for years and someone finally unlocks it and lets it drop. You're not suddenly rich, but you're no longer being punished for being poor. And that mental shift opens up space. Space to think about saving instead of surviving. Space to plan instead of react. Here's what most people don't understand about these thresholds. Getting to $25,000 isn't about the money. It's about building muscle. Let's say you're starting from zero. You commit to saving $500 a month. Not easy, but it is possible. 4 years later, you're there. But look at what happened along the way. You learn to delay gratification, you learn to automate, you learn to say no to things that didn't serve your future. You became someone who keeps commitments to yourself. That identity shift is worth more than $25,000. Because now you know you can do hard things, and that knowledge changes every decision you make going forward. You're not the same person who started this journey, you're someone who finishes what they start. And the bank can't see that, but you can feel it. The second threshold is $100,000 in investable assets. This is where private banking starts becoming available. Not the VIP stuff you're thinking of, but real private banking. A dedicated relationship manager, direct phone line, priority service. Here's what that actually means. Do you need a mortgage? You're not filling out an online form. You're calling Sarah. She knows your financial profile. She pre-approves you before you even tour the house. You want to open a business account? It's done in one meeting. No waiting, no runaround. You have a dispute with a merchant? Your banker handles it. You're not on hold with customer service for 45 minutes. Time becomes currency. And here's the thing nobody tells you. At this level, the bank starts making you money. They'll call you when rates change. They'll move your cash into higher yield accounts automatically. They'll alert you to opportunities you didn't even know existed. You're not just a customer anymore. You're a client. Let's talk about how you get from 25,000 to 100,000. If you've already built the discipline to hit 25, you're not starting from scratch. You've got momentum. Let's say you keep saving that same 500 a month, but now you're investing it conservatively. Maybe a low-cost index fund averaging 7% annually from 25,000 to 100,000, about 8 more years. 12 years total from 0 to 100,000. That sounds like forever. But think about it differently. 12 years from now, you're going to be somewhere. The only question is whether you'll be on the other side of this threshold or still waiting in line at the bank. And here's where it accelerates. Once you hit 100,000, that 7% annual return is $7,000 a year. You're earning more from your investments than you're contributing from your paycheck. Your money starts working harder than you do. The third threshold is 250,000. This is where wealth management becomes available. Not just investment advice, comprehensive financial planning, tax optimization, estate planning, the whole infrastructure. And here's what changes psychologically. You stop making isolated money decisions. Everything becomes part of a system. Should you buy that rental property? Your wealth manager runs the numbers, factors in your tax situation, and shows you exactly how it fits into your long-term plan. Should you take that job offer in another state? They model out the tax implications, cost of living differences, and impact on your retirement timeline. You're not guessing anymore. You're designing. And the confidence that comes from that, from knowing you're not just winging it, that changes how you show up everywhere else in your life. Here's where these thresholds create real power. Let's say your roof needs replacing, $22,000. For someone below the threshold, that's a crisis. They're taking out a home equity line of credit, paying interest, losing sleep. For someone at $250,000, it's an inconvenience. They move some cash from a money market account, handle it, and move on. Same house, same roof, completely different emotional experience. Or let's say a business opportunity comes up. A friend starting a company needs investors, offering equity. Below the threshold, you can't even consider it. You don't have capital to risk. Above it, you can evaluate it rationally. Maybe you invest $25,000, maybe you don't. But the opportunity exists for you. That's the shift. Life stops being a series of emergencies. It becomes a series of choices. The fourth threshold is 500,000 in total relationship value. This is when you start getting access to things that aren't even advertised. Preferential loan rates, not the rate on the website, a rate negotiated specifically for you. First, access to IPOs and private placements. Investment opportunities that retail investors never see, concierge services, not just banking, travel, event access, the kind of stuff that saves you hours of your life every week. But here's what matters more than the perks. At this level, you've stopped thinking about money the way most people do. You're not focused on how much you're making, you're focused on how much you're keeping and how efficiently it's working. You understand tax strategy, asset location, risk-adjusted returns. You've become fluent in a language most people never learn. And that fluency gives you an edge in every financial decision you make for the rest of your life. And here's what separates people who reach these thresholds from people who don't. It's not about cutting out lattes. It's not about extreme frugality. It's about getting the 3 big decisions right: housing, transportation, career. Housing. If you're spending 40% of your income on rent or a mortgage, you're bleeding. You'll never build wealth. But if you're spending 25%, even if it means living somewhere less impressive, you just freed up 15% of your income forever. That 15%, invested consistently, is the difference between staying stuck and crossing thresholds. Transportation. A new car with a $600 payment versus a 3-year-old certified pre-owned one you buy with cash, that's $7,200 a year. Compounded over a decade, $100,000. One decision, 6-figure impact, career. Are you optimizing for salary or total compensation? Does your employer offer a 401k match, HSA, Stock options? Two jobs with the same base salary can have a $50,000 difference in actual wealth creation over 5 years. Most people never ask these questions. They take the job with the bigger number on the offer letter and miss the structure entirely. The fifth threshold is $1 million in investable assets. This is when you enter what banks call high net worth territory. Everything I described before, it intensifies. You get invitations to wealth strategy sessions, access to alternative investments, dedicated estate planning attorneys. But more importantly, you've crossed a psychological threshold that changes everything. You're no longer worried about running out of money. Even if you never work again, if you withdraw 4% a year, $40,000, and let the rest compound, you're sustainable. You're not rich enough to be reckless, but you're secure enough to be strategic. And that security allows you to take the kinds of risks that create real wealth. Starting a business, investing in opportunities with longer time horizons, saying no to things that don't align with your values. You've earned the right to be selective. But here's where people destroy everything they've built. They hit a threshold, let's say $250,000, and they think they've won, so they upgrade. Nicer house, nicer car, private school for the kids. Suddenly, their expenses have expanded to match their assets. They're back to living paycheck to paycheck, just at a higher number. They've crossed the threshold and then voluntarily walked back across it. I've seen this happen so many times, it's painful. The discipline that got you to the threshold is the same discipline that keeps you there. There's no finish line where you get to stop being intentional. The thresholds aren't rewards, they're foundations. If you treat them like trophies, you'll lose them. Every dollar you spend upgrading your lifestyle early is a dollar that can't compound into freedom later. Let's say you're at $250,000. You're tempted to buy a lake house, $150,000 down payment. That $150,000 invested at 7% for 15 years becomes $400,000. So you're not buying a lake house for $150,000. You're buying it for $400,000 in future wealth. Maybe that's worth it to you. Maybe the memories and experiences justify the trade, but you have to see it clearly. Most people don't. They just see the down payment. They don't see what they're giving up. And then they wonder why they never reach the next threshold. And here's something that happens at each of these thresholds. Your relationship with work changes. At $25,000, you stop feeling desperate. You can handle a temporary job loss without immediate catastrophe. At $100,000, you can take a career risk. Switch industries, start a side business because you've got a runway. At $250,000, you can negotiate from a position of strength. You're not asking for a raise because you need it, you're asking because you've earned it. At $500,000, you can say no to projects that don't interest you. You can choose work based on impact and fulfillment instead of just compensation. At $1 million, you can walk away entirely if you want to. Each threshold doesn't just change your banking experience, it changes your leverage in every professional interaction you have. And people can feel that. Confidence isn't arrogance, it's just the absence of desperation. And the absence of desperation is magnetic. Look, I'm not saying everyone needs to hit all 5 thresholds. Maybe you're perfectly happy at $100,000. Maybe that's exactly the right amount of financial infrastructure for your life. But here's what I know for certain. These thresholds exist whether you acknowledge them or not. And the people who cross them aren't lucky. They're not special. They just understood the game and played it intentionally. So here's what I want you to do. Pick the next threshold above where you are now, just one, and build a realistic plan to get there. Not someday, not when things get easier, now. Maybe it will take 4 years, maybe it takes 8, the time's going to pass anyway. And when you get there, you're not just going to have a different banking experience. You're going to be a different person, someone who keeps promises to themselves.